Dubai has long been the Middle East's answer to Wall Street and the City of London, a glittering, ambitious city-state that remade itself as one of the world's financial crossroads. For years, it's drawn in global investors, billionaires, and multinational companies, all lured by its promise of stability, safety, and opportunity in a region often marked by volatility. But now, for the first time in decades, Dubai's reputation as a financial safe haven is facing its toughest test yet. The Iran war has arrived on its doorstep, not with bombs, but with billions in flight. This isn't a distant crisis. It's happening right now. As the conflict with Iran escalates, something quiet but unmistakable is underway in Dubai's financial sector. Wealthy elites, those who once trusted Dubai to be their vault in the desert, are moving their money out. Not in a noisy panic, but with practiced discretion. Their destinations of choice: Singapore and Switzerland, two financial centers that, like Dubai, have built their fortunes on stability, confidentiality, and global connectivity. The stakes are enormous. At risk is not just Dubai's image, but the core of its economic model. Over the past 2 decades, the city has become the Middle East's magnet for international capital, real estate, and banking. Its bold architecture and luxury lifestyle are only the surface. Underneath lies a rapid, relentless pursuit of efficiency, tax advantages, light regulation, and a business-first ethos that has seen trillions of dollars pass through its gleaming towers. But in the world of finance, reputation is everything. And today, Dubai's claim to be the region's most reliable safe haven is being put to the ultimate test. To understand how we got here, let's rewind. Dubai's rise began in earnest in the early 2000s, when it pivoted away from oil and doubled down on trade, finance, and tourism. Unlike its neighbors, Dubai didn't have vast oil reserves to fall back on, so it made itself useful and attractive to global markets, offering free zones, streamlined regulations, and a cosmopolitan lifestyle that drew talent from every continent. It wasn't just a city, it was a brand, one that stood for openness, efficiency, and above all, safety for capital. That strategy worked spectacularly. Dubai became a favorite for investors from Russia, India, Africa, and the wider Middle East, particularly those seeking a hedge against turbulence at home. Multinationals set up regional headquarters, private wealth flooded in. Local banks boomed, real estate soared, and the city's airports became among the busiest in the world. Dubai's promise was always the same: whatever is happening around us, your money is safe here. But markets are ruthlessly efficient in pricing risk. And now, with the Iran war casting a shadow over the Gulf, the calculus is changing. Investors are asking hard questions. Can Dubai still guarantee safety? What happens if the conflict expands? And if the world's wealthy are quietly exiting, what does that signal to everyone else? The response from global markets has been swift. Capital, always seeking the most efficient, safest home, is moving. The outflow isn't dramatic or chaotic. It's measured and deliberate, carried out by those with the most to lose. The beneficiaries are clear. Singapore and Switzerland, both old hands at managing global wealth, are seeing new inflows. Their appeal is simple: political neutrality, legal predictability, and decades of experience navigating geopolitical storms. For investors, it's a matter of market logic. Why keep your assets where the risks are rising when you can move them to more predictable shores? The implications for Dubai are profound. First, there's the immediate financial impact. Capital flight weakens the banking sector, reduces liquidity, and can sap confidence in local markets. Investments slow, property values falter, and the virtuous cycle of growth can slip into reverse. In a city where so much depends on the constant inflow of new money, even the perception of risk can do real damage. Second, there's a competitive dynamic at play. Dubai isn't the only global financial hub vying for the world's capital. Singapore and Switzerland have been in this game for generations. They offer not just safety, but efficiency and discretion, qualities that matter even more in times of uncertainty. When Dubai's core value proposition is challenged, its rivals are quick to capitalize. The flow of money is the ultimate vote of confidence or a signal of doubt. But how big is this outflow, and how long could it last? You're watching Today in Context, where we go beyond the headlines to explain the forces shaping the world around us. If this kind of analysis helps you make sense of the bigger picture, like the video and subscribe for more. For now, the true scale remains uncertain. The movements are discreet by design: private jets, shell companies, wire transfers routed through complex channels. Official data will lag the reality on the ground. What's clear is that the trend is real, and the market is watching closely. Dubai's authorities now face a delicate balancing act. They need to reassure investors, stem the outflow, and signal that the city remains open for business. But their options aren't limitless. Too much intervention, and they risk spooking markets further. Too little, and the trend could become self-reinforcing. The challenge is to restore confidence without appearing desperate, because in the world of global finance, perception moves faster than policy. The city's technocrats have weathered crises before. the global financial crash, the pandemic, even regional conflicts. Each time, Dubai has relied on its ability to adapt quickly, communicate effectively, and keep the engines of trade and finance running. But the Iran war is a new kind of test. It's not just about managing market volatility, but about maintaining the very trust that underpins Dubai's financial model. If Dubai can't stem the tide, the consequences could ripple far beyond its borders. The Middle East has few truly global financial centers. If Dubai's status as a safe haven erodes, there could be broader regional impacts, less investment, more volatility, and a potential shift in trade flows. Other Gulf states might try to fill the gap, but none have Dubai's scale or track record. The efficiency of global markets means capital will always find the path of least resistance. If Dubai loses its edge, the winners will be those centers, like Singapore and Switzerland, already seen as more stable. This moment, then, is more than just a local crisis. It's a test of how global finance responds to geopolitical shocks and how quickly incentives shift when the underlying risks change. Already, investors are recalibrating. Those who prize efficiency and security are moving their assets. Others are waiting to see how Dubai's leaders respond, whether with new guarantees, regulatory reforms, or perhaps just a renewed campaign of confidence building. The immediate risk is that capital outflows accelerate, putting further pressure on Dubai's banks and property markets. If left unchecked, this could spiral into a broader loss of confidence, a cycle that's notoriously hard to break once it takes hold. On the other hand, a strong and credible policy response could reassure investors, convincing them that Dubai remains the region's best option for safety and returns. Much will depend on timing, messaging, and the underlying trajectory of the Iran conflict itself. There's also the possibility of a new equilibrium. If the outflows stabilize and Dubai proves resilient, the city could emerge even stronger, its status as a financial hub reaffirmed by its ability to withstand crisis. But if the current trend continues, the longer-term risks multiply. Lost capital is hard to win back. Reputation, once shaken, can take years to rebuild. And in an era where global markets are more interconnected and efficient than ever, the margin for error is slim. So what should we watch for next? First, keep an eye on any official announcements from Dubai's policymakers or central bank. New regulations or guarantees aimed at shoring up investor confidence could be a sign that authorities are taking the threat seriously. Second, track the flow of capital. Are the outflows slowing or are they accelerating? The answers will shape not just Dubai's future, but the broader map of global finance in the Middle East. Finally, consider the wider geopolitical context. If the Iran war escalates, the pressure on Dubai will only grow. If the situation stabilizes, there may be a window for recovery. Markets will respond, efficiently and with little sentiment, to whichever path becomes clearer. In the end, Dubai's current challenge is a reminder of how quickly the ground can shift in global finance. For years, the city built its fortune on being the region's most reliable haven for capital. Now, that reputation is under real pressure, tested by geopolitical events beyond its control, but shaped by how efficiently and credibly it can respond. The world's wealthy have options, and in times of uncertainty, they don't wait for second chances. For Dubai, the coming months will be critical. The city's ability to adapt, reassure, and compete will determine whether it can maintain its status as the Middle East's financial crown jewel, or whether the winds of global capital will shift elsewhere, leaving behind only memories of a golden era. In global finance, efficiency and trust are everything. And as Dubai faces its biggest test yet, both are now in the balance. How the city responds, how quickly, how credibly, and how decisively will shape not just its own future, but the future of financial flows across Middle East and beyond. For now, one thing is clear. The market has spoken, and the message is unmistakable. In a world where risk is rising, capital flows to safety with relentless efficiency. Dubai's challenge is to prove that, even in the storm, it remains the safe harbor it has always claimed to be. The next chapter in this story is still being written, and the world is watching. The stories that define tomorrow are already unfolding today. Subscribe to Today in Context for clear, grounded analysis of the events shaping our world, one story at a time.